Over the course of 2024, Warren Buffett, the world's best investor, has been building up a massive pile of cash, the likes of which investors have never seen before. $325 billion, dollars, and what's even more concerning is his language around why he's doing it all under current conditions, building the cash position. We find it quite attractive over the past year or so. A massive discussion topic in the community has been the lack of opportunities in the market and the accumulation of cash in preparation for some sort of rough weather ahead. So what even is a stock market correction? A market correction is a decline in the price of a stock or group of stocks, typically defined as a drop of 10% or more from a recent high. It's worth noting that corrections are a normal part of market cycles and can occur in response to various factors, including economic conditions, such as interest rate movements, external events, such as the coronavirus, or wars. They can even just occur from changes in investor sentiment. So literally, investors en masse start feeling more bearish about the future. Corrections can happen to an individual stock, say Tesla or Nvidia. You can see each of those stocks suffering multiple corrections across the past year. You can also see a correction across a sector or industry. For example, in July and early August this year, we saw a correction in the NASDAQ, a list of predominantly technology-based businesses in the US. And then, of course, finally, you can see a correction in the overall market itself as investor sentiment changes. Take the start of 2022 as an example. That was when inflation crept up very high and the Fed started signaling that they were going to raise interest rates. A lot of very smart value investors are building up piles of cash to prepare for turbulent times ahead. So where are we at the moment? Well, it's no secret the US stock market is pretty darn overvalued. And when you look at all of the big companies in the S&P 500, it's true their valuations are seriously stretched. And a lot of people will say that the stock market up at all-time highs means there's a correction on the horizon, but actually that is not true at all. Occasionally, very occasionally, overvaluation can cause the prices of individual stocks to correct, but it's typically not a deciding factor as to whether the stock market more broadly dives into a correction. There's a great quote from John Maynard Keynes that says the stock market can stay rational longer than you can stay solvent. And that is very true. Markets can stay overvalued for a very, very long time. So much so that it is a really bad strategy to bet on a market downfall based simply on irrationality happening in the market. Just trying to time the market doesn't work. So the next question is, are there potential catalysts on the horizon today? And the answer is, well, yes. That doesn't mean they'll eventuate into any sort of correction, but there are very many potential catalysts looming on the horizon as we speak. One obvious one of recent times is the US election, a change in power, a change in policies.
No Social Security taxes, no.
Going back to Warren Buffett's words around wanting to hold more cash, quote, with all that's going on in the world right now, this isn't him predicting that a correction is on the horizon. He's simply saying right now there are a lot of potential catalysts that could kick things off, so he's making sure he's prepared for any outcome. So we need to have at least some cash ready to take advantage of those infrequent opportunities that can really accelerate our annual returns. If you do have some cash set aside, you can really benefit when those corrections come along. So in summary, I think yes, like what Warren says, there are plenty of catalysts today that may trigger a correction in a very overvalued stock market.